Hey everyone, welcome back to Corporate Decoder, the place where we slice through corporate jargon to find the real story. And today we're diving deep into a regulatory filing that gives us the inside scoop on Monteagle funds. And trust me, this one has enough numbers to make your head spin, but we'll decode it all for you so you know exactly what is going on with this investment. Company, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Alright, let's get straight to the heart of this report, which is the annual shareholder report from Monteagle Funds for the period of the 1st of September 2024 to the 31st of August 2025. Think of this as their yearly checkup specifically detailing the performance and financial health of their various funds. First up is the Monteagle Select Value Fund Institutional Class. For the year ending the 31st of August 2025, this fund saw positive returns thanks to strong stock selection. Now, they did mention that growth stocks outperformed value stocks, which meant their returns were a bit lower than the S&P 500 impressive 15.88% return. However, the fund still managed to return 6.17% during the fiscal year, which was just slightly higher than the S&P 500 Value Index return of 6.07%. Their strategy here is pretty straightforward long-term capital appreciation by investing at least 80% of their assets in undervalued domestic companies. They really focus on picking stocks that have a good price-to-earnings ratio and book ratio below the market average, along with a higher dividend yield. Now let's talk numbers straight from the financial tables, which are always the most interesting part. For the Select Value Fund, specifically looking at net assets here, we see a figure of $17,529,150. That is the total amount of money managed by this fund. Then they show us the portfolio holdings. It is 42. That means they had 42 different investments in their portfolio. And the portfolio turnover was 54%. This tells us that over half of their investments were bought or sold within the year, which can indicate an active trading strategy. Fees paid to the advisor specifically for this fund amounted to $82,448. This is the direct fee paid to the company managing the fund's money. Moving on, we have the Monteagle Opportunity Equity Fund Investor Class, which returned 7.43% over the past year. This fund aims for long-term capital appreciation too, but focuses on mid-cap and small-cap companies using a high-quality screening process. They look for companies with stable earnings and good debt management. Noteworthy is their performance during a period they call the tariff tantrum, where from the 2nd of April to the 8th of April, for example, their fund returned negative 12.93%, while the S&P 500 was down 12.12%, and the S&P Mid 400 was down 14.10%. This shows they did not participate as much in the downside relative to most small and mid-cap focused funds. Looking at the financials for the Opportunity Equity Fund, we see net assets of $15,766,237. Portfolio holdings are significantly larger here at 119 investments. This diversification across more companies could be part of their strategy. The portfolio turnover is higher at 69%, suggesting more active management than the Select Value Fund. And importantly, the fees paid to the advisor for this fund were $39,257. Next is the Monteagle Enhanced Equity Income Fund Institutional Class. This fund had a solid year with a 12-month total return of 8.41% versus 7.72% for its index. Their strategy here is a bit different. They maintain long positions in quality stocks, but also write covered call options above their purchase price to boost income and total return. They did this by tactically overweighing financial services, energy, and utility sectors. The fund is also looking to benefit from the continuing data center build-out for artificial intelligence infrastructure. For the Enhanced Equity Income Fund, the net assets are $13,717,226. They hold 48 portfolio securities, a more concentrated approach than the Opportunity Equity Fund. Portfolio turnover is quite high at 171%, a possible indication of their active options strategy. Fees paid to the advisor were $40,191. One of the most interesting tables for this fund lays out their written options. For example, they had written call options on Qualcomm, Incorporated valued at negative $1,955, and on Linde LC valued at negative $2,592. This shows the immediate market value impact of these options contracts. Finally, we have the Texas Fund Institutional Class. This fund delivered a strong 11.44% return for the year, outpacing the S&P 400 Mid-Cap Index and the S&P 500 Equal Weight Index. Their investment goal is long-term capital appreciation with a specific focus on companies headquartered in Texas, or those that derive a significant portion of their revenue from Texas. They invest 80% or more in these Texas-focused companies. The Texas Fund boasts net assets of $15,266,157. They hold 89 portfolio securities. Their portfolio turnover is 59%, and the fees paid to the advisor were $50,990. This fund's strategy of focusing on the Texas economy certainly sets it apart. Now, for a look at the overall financial health and operations across all the funds, the statements of assets and liabilities show us the big picture. For the total assets of the Select Value Fund, it was $17,553,836. $53,836. Opportunity Equity Fund had $15,795,537 in total assets. Enhanced Equity Income Fund had $13,744,608, and the Texas Fund had $15,290,988 in total assets. That gives us a clear view of the scale of these investment pools. The statements of operations for the year ended the 31st of August 2025 also reveal some interesting performance metrics. For the Select Value Fund, net investment income was $156,171, but the net realized gain from investments was a whopping $18,907. For the Opportunity Equity Fund, net realized gain from investments was even higher at $1,484,702. This shows that while some funds generate income from dividends and interest, a significant portion of their gains, especially this year, came from selling investments that had increased in value. Looking at the financial highlights specifically for the Select Value Fund institutional class shares, the total return for 2025 was 6.17%. This is a key number that shows how much an investment would have grown. It is interesting to see that the ratio of expenses to average net assets for this fund was 1.45%. That means for every $100 invested, about $1.45 went to fees and operating costs, which is pretty standard for mutual funds. For the Opportunity Equity Fund institutional class, shares the total return was 8.06%. Their ratio of expenses to average net assets here was a tad higher at 1.31%. The Enhanced Equity Income Fund institutional class shares had a total return of 8.41%. Interestingly, their ratio of expenses to average net assets was 1.35%. And for the Texas Fund institutional class shares, the total return was 11.44%, which is quite strong. Their ratio of expenses to average net assets was 1.69%. This is the highest expense ratio among the funds discussed, which means investors are paying a bit more for the management of this particular fund. Now, moving into the notes to the financial statements, we get some important context. For example, the funds follow accounting principles generally accepted in the United States of America, which is standard practice. When it comes to securities valuation, they use last reported sales prices or official closing prices for stocks and other securities. For money market funds, they value them at their net asset value of $1 per S-share. They use a 3-level fair value hierarchy. Level 1. Inputs are quoted prices in active markets. Level 2 are other significant observable inputs. And Level 3 are significant unobservable inputs. So it's good to see that for these funds, most if not all investments were in Level 1 or Level 2, indicating they are valued based on observable market data, not subjective estimates. The report also details advisory fees and other transactions with affiliates. Park Place Capital Corporation is the main investment advisor, and they pay sub-advisors to manage specific funds. For example, the Select Value Fund has Parkway Advisors, LP, as a sub-advisor, and the fees are paid by Park Place Capital. The fee structure is tiered, based on assets under management, which is a common practice to incentivize growth, but also ensure fees reduce as funds grow larger. Under tax matters, it is noted that the funds intend to comply with the special provisions for regulated investment companies to avoid federal income tax on distributed income. This is good news for shareholders, as it means the fund itself isn't taxed on profits it passes on. They need to distribute at least 90% of taxable income and 98% of net investment income annually to maintain this status. The report also breaks down the tax character of distributable earnings and deficits for each fund. For instance, the Texas Fund had a significant unrealized appreciation of $4,784,895. Looking at control ownership for the Select Value Fund, NFS LLC holds 61% of the shares and Raymond James and Associates Incorporated holds 34%. When a shareholder owns more than 25% of a fund's voting securities, it can indicate a significant level of control. Similarly, for the Enhanced Equity Income Fund, Fifth Third Bank holds a very large 82%. This high concentration of ownership by a few entities can sometimes influence fund decisions, but it also means they likely have a strong vested interest in the fund's success. Scroll Cohen and Company Ltd count, and finally, The report of independent registered public accounting firm from Cohen and Company Limited states that the financial statements are presented fairly. They've been the fund's auditor since 2004, so they have a long-standing relationship. They confirm the financial statements are free of material misstatement, which is what you want to hear from an auditor. So what does all this mean for Monteagle funds? Overall, the funds have delivered decent returns for the year ending August 2025, with the Texas Fund being a standout performer. While some funds like the Select Value Fund trailed the S&P 500, the strategies employed seem to be generating positive results overall, especially considering the volatile market conditions they navigated. The use of derivative strategies in the Enhanced Equity Income Fund and the specific focus on Texas companies in the Texas Fund are interesting differentiators. The fee structures are competitive, but it is always worth noting the expense ratios. For investors, these reports are crucial for understanding where their money is going and how it is being managed. If you saw any of your investments here or have thoughts on these strategies, let us know in the comments. Alright, that is our breakdown of Monteagle Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.